Mezo put its governance token and Bitcoin-backed MUSD stablecoin onto Bullish, turning access into the real test. Stablecoin Mezo is not just about another exchange screen. The bigger question is whether Bitcoin holders will use MUSD as spendable liquidity, collateral, and application fuel instead of leaving BTC idle. That distinction matters because a listing can improve access, while a stablecoin's value depends on collateral design, peg behavior, liquidity, and real application demand. That is why access and adoption should be measured separately. MUSD is designed as a one Bitcoin-collateralized stablecoin. That means the stablecoin depends on BTC backing rather than the usual fiat reserve model. The pitch is practical. Lock Bitcoin, create a dollar-like asset, and use that asset for payments, borrowing, or DeFi activity without selling the underlying BTC position. The model is especially aimed at people who see Bitcoin as long-term collateral, but still want a spendable unit for trading, payments, or borrowing inside an ecosystem. The stable unit is supposed to unlock Bitcoin without forcing a sale. The Bullish listing gives institutional and retail traders direct access to Mezo and MUSD through a venue built around a hybrid model. Central limit order book matching plus automated market making. In plain English, it combines traditional order matching with liquidity automation. That can matter if the goal is tighter trading access, not just a token page. Liquidity quality will decide whether that access feels smooth, because a listed asset with thin depth can still be hard to enter or exit without moving price. Depth matters most when larger traders try to move size. Stablecoin Mezo also depends on custody trust. BitGo provides custody infrastructure for Bullish, with customer assets maintained at a 1:1 ratio and separated from company assets. For institutions, that separation is not decorative. It shapes whether they can treat the venue as a serious trading route rather than a speculative side market. Segregated custody and one-to-one asset handling are practical details for traders who need to know whether venue risk is separated from company balance sheet risk. Custody language becomes meaningful only when assets are clearly segregated. The ecosystem has reported more than $70 million in total value locked and over 43,500 mainnet users. Mezo has also worked with Aerodrome Finance to build deeper liquidity for Mezo and MUSD pairs. Total value locked is the amount of assets committed inside the system, and it helps show whether users are actually putting capital to work. Total value locked can rise for many reasons, so the more useful question is whether that locked capital supports payments, borrowing, liquidity, and developer activity. Capital locked inside the system should translate into useful activity. The risk is visible on the governance token side. Mezo surged to an all-time high around 0.1415 on April 13 and 14, then traded far below that peak after a sharp pullback. Low liquidity can magnify moves in both directions, so the token's volatility should not be confused with stablecoin adoption. That volatility split is central. The governance token can swing sharply while the stablecoin is supposed to stay steady around its peg. Stablecoin behavior and governance token behavior must not be blended. For stablecoin Mezo, the next signal is real MUSD usage, not only listing activity. Watch whether the peg remains steady, whether liquidity deepens across pairs, and whether applications start building around BTC-backed dollars. If usage grows while volatility stays contained, Mezo's Bitcoin economy pitch becomes easier to measure. A durable signal would be everyday MUSD use inside applications, deeper order books, and fewer wild gaps between the stablecoin story and the governance token chart. Usage will decide whether the Bitcoin economy pitch has traction.